In this webinar, I will address some positive global economic trends emerging recently, which might boost stocks and commodity prices in the weeks ahead. Here is what I have to say. Number 1. Commodity traders are ramping up their bets on copper, wheat, soybean, and other commodities, as indicated by Commodity Futures Trading Commission data. The three key drivers of this trend are decline in the US job rate, signaling some signs of vitality in the moribund US labor market. China lowered banks' reserve requirements, and the US manufacturing expanded at the fastest pace as compared to past 6 months. Number 2. The slight acceleration of the US global growth while averting a possible economic nosedive was reflected in the following indicators recently. The MSCI All Country World Index soared, the Standard & Poor's GSCI Commodity Index advanced, the yield on 10-year US Treasuries rose, and finally the dollar index declined against benchmark of 6 currencies. Number 3. While the US seems to be positioned on moderate growth path, Europe might be sliding into some degree of recession. In Europe, the manufacturing has cooled down a bit. On the European debt crisis front, there is some ray of hope that a combined bailout package between European central banks and the IF may succeed in mobilizing some $270 billion, about 200 billion euros, in order to avert the crisis. Number 4. Finally, China has a moderate growth pattern, lower than expectations for 2012, as strongly indicated by a slumping pace of manufacturing sector in China. In response to this, the Chinese central bank has changed the reserve requirements of the banks, which actually have stimulated the Asian stock markets recently. It looks like that the slowdown in Chinese growth can moderate global and the US growth in 2012 to some extent.